So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to have you scale and compound your wealth in life so you can give more all of it away to help MVPs, the most vulnerable people. My name is Brett Swarts. Each and every episode, we're joined by some of the world's top entrepreneurs, millionaires, and billionaires. We're going to share their secrets and wisdom with us so we can all scale up and make a bigger impact. I'm excited about our next guest. He's out of the Newport Beach area in California, and he's on a mission to help all of us unlock rare opportunities with trusted returns in setting a new standard in commercial real estate investments. He's been in commercial real estate for a number of years. He's an investor, mentor, and philanthropist, built a $500 million commercial real estate empire, billions in transactions, and the I Own It podcast, and so much more. Please welcome to the show with me, Mr. Ben Reinberg. Ben, how are we doing today?
Good. Thanks, Brett. I appreciate you having me. I look forward to adding a lot of value to your audience and talking shop and talking about commercial real estate and how I can help them achieve their goals in building wealth, which is part of my expertise.
Fantastic. And for our listeners, get to know you for the first time, maybe give us just a little bit more about your story and your current focus.
Sure. Well, I come from Chicago. My headquarters are in Chicago. That's where a majority of my staff sit today. We have offices around the country. And I started Alliance back in my early 20s, and I had no money, no net worth. And I talk about it in my book. My new book, Hard Assets and Hard Money for Hard Times, goes back. And I wrote that for the audience. It's not about me, but it talks about all the different war stories in my career. And it's more of an inspirational piece that people can use. It's evergreen because it has a hard asset blueprint, and we could talk about what the hard asset blueprint. But when I started my career in my early 20s, I didn't come from money. I was not born into wealth. Like many of you listening, I had to learn the game of money, and I made mistakes, and a lot of them. And I learned tough lessons, and through it all, I understood and discovered the path to genuine financial freedom, and a path that doesn't rely on luck or fleeting market trends, and I wish someone would have come along sooner and taught me what I know today. And that's what I'm doing out in the marketplace. So I started my commercial real estate empire and firm back in the early 1990s. I was one of the leading firms. We did a lot of project management for office and industrial real estate. Chicago is a large presence in office and industrial. It's where I cut my teeth. Then we got into retail, and I've been in the business for 32 years, 23 years of my business. We started the medical office division of Alliance. And how that came about is we saw that general office was really dying on the vine with large vacancies. People didn't need as much office space, Brett. And we saw that office space wasn't being absorbed like it used to be, especially in the suburbs. So we said, what asset class can really take prevalent in the office space market? So we got involved in the medical office space. We're one of the leaders. About 10 years ago, we started buying veterinarian office. And then a year ago, we opened up division to buy multifamily to take advantage of the opportunities that are forthcoming in that sector. So we're very well diversified. We also have hard money lending division, and we have a lot of different verticals to help investors, high net worth accredited investors, LPs, and family offices be able to build wealth. And that's what I teach, and that's what our firm does. So I realized a long time ago that hard assets is the way to build wealth.
Excellent. Amazing, Ben. Love it. And by the way, if you want to learn more about Mr. Ben Reinberg, you can go to alliancecgc.com. It's alliancecgc.com. It's interesting. You mentioned Chicago and the late, great Sam Zell. I imagine you probably know him or have known him over the years being from there. I read his book, Am I Being Too Subtle? I feel like it's a must read for every business, entrepreneur, real estate person. I wish I would have picked up earlier. I'm curious, what did you learn from Sam over the years being in the same town, and what's something that maybe you want to share if there's any kind of unique stories with that?
Well, I met Sam a handful of times, and he gave me great advice. And I think there was a mutual respect there because I was starting off. I wanted to be him. I wanted to buy skyscrapers and big buildings and have like a company like Equity Office. And I realized it wasn't going to be feasible based on what was going on in the office market. But I learned about the ability to hold from him. I learned about don't sign your name and take on recourse, especially when markets change. I learned a lot about doing deals and being relentless and being persistent and doing what it takes to get the job done and not worrying about what other people think and feel. I learned about firing quickly, hiring slow. I learned all different things from just listening to him. And I'm very grateful he's from Chicago. I've had a lot of incredible mentors come across my path, Brett. And I think at the end of the day, when you look at my new book, it's come full circle. It's because whether it's Sam Zell, the Pritzkers, the Crowns, the Rockefellers, every single billionaire wealthy family has hard assets in their portfolio. And it's a common ground. And we've been taught a lie about money for a long time. And I'm here to tell you that we've been telling people to work hard, to earn, to save, and to hope. And I'm here to tell you that's a losing strategy. And the reason why I say all this, I want everyone to listen to this, is really important because no one talks about it, is savings accounts, while seemingly secure, are really actually bleeding value. Okay. They're eaten away by the opportunity cost that drains it, inflation, taxes, and the relentless march of time. And so what I teach people is not to become rich, is to become wealthy. And wealth is about securing your financial future. It's about controlling your destiny and building an empire that lasts like I have. And so I live it and breathe it. And I created this hard asset blueprint for the public. So you can use from the Ben Reinberg that started 32 years ago to the billionaire now, can use the hard asset blueprint, help build or enhance their webinar to protect, grow, defend, and compound their wealth. And that's what I teach. And that's the opportunity that investors have when they invest with us because
Beautiful.
of the history of the company.
Beautiful. So let's dive into that, right? And our audience is oftentimes, I call it having a tax flow, cash flow, and debt flow mindset. Seeing investments in 3D. You mentioned you just get into multifamily now, which I think it's a good time because you didn't get in 3 years ago when everything was at the peak, right? And you've been in retail, you've been in industrial. Industrial seems to have weathered the storm. Medical office seems to have weathered the storm, right? And you also in veterinarian investments, right? Veterinarian asset classes. Walk us through either your favorite now and also the timing of getting into the multifamily world, because I think that's strategic of you, because we thought it was overpriced a few years ago, and that's why we were getting out a lot of it before the market shifted with interest rates. Give us a little bit of that flavor of where we're at today with investment real estate.
Well, I mean, one of my favorite asset classes is medical office. We're one of the leaders in the country in medical office. And the reason why I love it so much is the human body is never going out of style. I got great renewal rates, great escalations, good credit tenants that build deep roots in their community. And so I like stability. I'm a big stability guy. I love stability and cash flow. And it creates a large breadth of buyers that want to acquire these properties once they mature and you're ready to sell them. So we've done extremely well. We have an incredible track record in medical office. Why we got into the multifamily space is I was in Japan about a year and a half ago, or maybe it was closer to 2 years now. And I was watching a lot of my colleagues that were in multifamily. I saw some of the younger generation in that side that were buying at aggressive cap rates, and they were putting on short-term debt. And so they're going against my principle, the ability to hold, the ability to hold. And I saw with debt coming due, and I saw the ability that they're going to have to sell, and they might have to sell at losses, or there might be some debt. I know there's trillions of dollars of debt coming due, that there's going to be debt on multifamily that's going to be coming due. We're going to have some motivated sellers. So we stepped in. I looked at my property management team, and they said, yeah, we have a lot of experience in multifamily, and we have 200 years of leadership team experience. So we kind of met, and I said, I was in Japan, and I said, I was watching what was going on. And I said, I think it's going to be the right time in 2024 to start a division, get ready. In 25 and 26, we're going to get great buying opportunities. That's exactly what we did. We have our first deal tied up right now that we're bringing in equity and debt for. I'm really excited. It's in Houston, Texas, great opportunity. And I could see that evolving. And so for us, we're opportunistic. And I said, because we said, well, why aren't we in multifamily? Everyone else is, and there's an opportunity. And I said, well, we're going to get in at the right time. And when we do, we're going to make a big splash, especially for investors and our investment capital. And that's exactly what we're doing. So again, it goes back to the vast amount of experience at Alliance and what we do and listening to the market and understanding how to benefit investors.
Yeah, back to kind of Sam and his book, Am I Being Too Subtle? And he talks about grave dancing, right? And I think it's just a great chapter, especially if you get a chance to listen to the audio portion of that, Ben, and anyone who's listening out there. And he talks about this exact piece, right? Understanding debt flow and debt markets and the changing of trends and being in front of and not caring what the rest of the herd is saying and sticking to your instincts. Ben, what's the top strategy or habit that you practice to stick to your instincts and not get caught in the herd?
You know what? It's interesting you say it, because I'm a lot of people look at me as a visionary and a thought leader in the business. What I do is I just listen, and I learn, and I educate myself, and I'm extremely vested in the business, and I'm big into learning and growing. So I'm constantly reading and improving myself and being aware, and my awareness is heightened. And so when we saw the office market and changing, and with the internet coming about and space not being absorbed and people not needing as much office space, I took a step back and said, if we're going to do office, where are we going to be in this market? And then the medical office bloomed, and I realized I was one of the first ones ever buy a dialysis facility in the real estate, and we set the market on fire with a deal in Austin, Texas, where we sold it for a 6.25 cap, and the market never saw a 6.25 cap. Nowadays, it's a little bit different. And so we set the world on fire, and we said, wow, this medical stuff is really great stuff. A lot of people want to buy it from us. So we grew that. And for me, it's really just taking advantage of the market and listening and seeing where the opportunities are, seeing where the debt wants to be and where capital partners are. And when you put it all together and you have the experience we do, it just naturally comes by osmosis. What's going on in the market? Where are people struggling? Asking, reading, seeing what's happening, and talking to a lot of brokers out there to see what's moving. What are people saying? Where do they want to be? Where does capital want to be? And that allows us to formulate some great opportunities.
I love it, Ben. We're speaking with Ben Reinberg, everybody, and you go to alliancecgc.com, alliancecgc.com. You can also just look up benreinberg.com as well to learn more about Ben and get connected, become an investor. Okay, let's keep going here, Ben. So you talked about Houston, Texas, the multifamily deal. We can get specific if that's helpful, for our listeners. And if you'd like to go to that route, what made that deal attractive? And what were you able to negotiate to lock up that deal?
Well, we're at a point where we're getting it a great price per door. Houston's a very cyclical market. We're getting at the right part of the cycle, and we're going to add a lot of value to half the units. And so we see a real opportunity to add value, buy it at a distressed price, and take it to another level and sell it within a 3 to 5 year period. So we saw a lot of opportunity with that potential acquisition. And so we're very excited about it.
Do you have a fund model, syndication model? How do you do it, Ben?
Yeah, we do. I mean, when it comes to multifamily, it's going to be a syndication right now model as we launch this thing. The medical is a medical fund. We have the Alliance Medical Fund, which we already have 7 assets in this particular fund, and we're growing it. We'll probably have about 25 assets at the end of the day. We'll sell it to an institution. Generally speaking, we've been syndicating real estate for over 3 decades. Our deals generally sell out between 30 minutes and 3 hours, depending on the deal. So they move fairly quickly. We have a great track record. Across the board on all the asset classes, we're about 28% internal rate of return as our track record. Medical office, we're about 24 to 25% internal rate of return. So great returns, great cash flow, great upside, and transparency. I mean, when you invest with Alliance, our core values are transparency, integrity, consistency, and expertise. And it's that white glove 7-star experience you're going to have if you're an investor.
Excellent. So we're talking about raising capital versus unlocking capital. I imagine a lot of commercial real estate syndicators or fund operators, they come to you as a mentor to teach them how to grow and scale. What has been your top secret to unlocking capital, especially in today's marketplace, where some investors have either, gotten hurt or capital called and all of those things. And then second, there's just, a little more cautious these days to invest in, let's say, a world that's a little bit uncertain. Is there anything that's helped you keep and sustain momentum for bringing capital in?
Well, tax benefits. We have a lot of investors that are looking for tax benefits. I'm also a CPA. And so we do a lot of cost segregation studies on our properties. If you look at the medical fund, you're receiving cash flow every quarter, plus you're creating paper losses, which they can use against other passive investments. So that's extremely attractive to investors. And so tax benefits have been a huge driving force in some of the things we do. But again, for us, it's because of the track record. It's 200 years of leadership team experience. It's having emotional intelligence within the company. It's being able to solve challenges, which we do extremely well. So what that does is investors end up trusting Alliance. They know we're one of the first companies in the country that created an investor portal, which was never seen. And so with technology, and now we're about 2 years ahead of every commercial real estate firm with AI, we're a thought leader, we're advanced, we're visionary, and investors want that. They want cutting edge, good transparency, great returns with great secure assets. They can go kick the bricks and mortar.
Excellent. Speaking of tax, one of the things we specialize in is capital gains tax solutions, allowing and or unlocking capital from the sale of Bitcoin, businesses, real estate, without using the 1031 exchange to be the bridge into funds. Mostly we've done multifamily, mobile home park, industrial funds for a lot of the groups that we work with. What would it mean for those that are selling $10 million or $100 million business of Bitcoin or real estate, something that's not even 1031 eligible, to be able to defer the tax and be able to go into your fund tax deferred, kind of like a 1031, kind of like a self-directed IRA, but allow them to defer that tax. That piece, I feel like it's a low-hanging fruit that a lot of commercial real estate fund managers have missed. So I'm just curious on your thoughts on that ability to bring that capital in.
Yeah, I mean, that's something we would definitely have. We love looking at different opportunities. I mean, one thing that we don't do is tenant in common deals or DSTs. I don't believe in them. I don't like the structure. I think it makes it cumbersome and it's extremely expensive. So if there's other vehicles out there, kind of like what you do and other ways to bring in capital, one thing about Alliance is we don't shy away from new concepts. We're extremely aggressive when it comes to learning about new opportunities and the way to bring in capital. And like I've learned in my career, I mean, because I've been in the business long enough, I've seen investors pass away. We have their kids investing with us. So we're always looking for new ways to bring in capital. So absolutely, I think you have to be open-minded to different opportunities.
Okay, so this is gonna be fun because I didn't prepare having you on the show. I have so many shows, but I think this will be good right now. I want to dive into this right now. Are you ready to go back and forth for just a few minutes?
Sure.
All right. So typically, and I agree with you, by the way, the TICs blew up in 2008, right? The crisis of 2008, people got hurt. Tenant in common, There's the Delaware Statutory Trust, which is another form of a 1031 exchange for those that are listening. And it's kind of a structured Delaware. And yeah, for lots of reasons, they're not great. Huge fees, securities, professionals. And we only ever use those for debt over basis challenges. But those are part of the 1031 world. We call that blockbuster. So a strategy we use, Ben, is an installment sale with the trust, right? It requires a third party and related trustee. That's us, right? Is where someone can sell and then take back paper on Bitcoin, business, real estate. And the beauty of it, because it's 453, there's no longer any time restrictions. There's no like-kind replacement requirement. There's no debt replacement requirement. And you can go right into real estate funds, which is what a lot of our real estate business entrepreneurs like to do. And so that's number one. And so example, we actually did a $13 million deal in San Diego. It was a car wash, a developer. They knew the interest rates were high. And we said, why would you develop something for 4 million, sell it for 13 and buy at the height of the market and all this debt when you can use our strategy and be out of debt, diversified, and wait on the sidelines? And that's exactly what we've done. And it's like transformed their approach to their investing. And so this strategy at the end of the day allows you to defer this tax and then have timing on your side and to diversify. You can also go into stocks. You can also go into hard money lending. You can develop with the projects. You can be an entrepreneur. Most people don't know how to do this. In fact, I didn't know about it until Marcus and Millichap in the 09, after the crash of 08, and then 09, I learned about it. But now this is, I call it the Netflix of the old Blockbuster way of doing things. And so, A, have you heard of it? B, what is your first initial thoughts, or if you haven't dug too deep into this at this point? And I'd love for us to kind of go back and forth, because I feel like it is the lowest hanging fruit to unlock capital versus just raise it. And on top of that, this $100 trillion wealth transfer for the next 5 to 15 years by the baby boomers, the largest in the history of the planet, is at stake. And most of those assets, private equity and or primary homes, don't qualify for 1031s, nor can they 1031 into a fund. Right. And so this becomes this bridge to capture, this massive wealth. Second, we can also save failed 1031 exchanges. So if someone wants to go for a 1031, but it fails, and I imagine you get called and they say, hey, Ben, I want a 1031 into your fund. You're like, you can't do it. Right. And so you kind of either turn them away or they just pay their tax and show up. In our scenario, you never have to turn them away ever again. They can land into this trust. They get a promissory note, but the trust can go right into your deal tax deferred.
Oh, that's great. That's fantastic. So basically it goes into your trust, and then so basically you're providing a service to investors to sell into your trust, and then it's an installment sale. You'll give them chunks. How does that work over what time period?
Yeah. So first of all, it's an individual trust that only does business with that family. So they're never commingled. It's not like a big pool of money, right? So it's sit at Charles Schwab, and think of it like a $10 million deal at zero basis in Newport Beach. You would have paid, let's say, $4 million of tax after depreciation recapture. Instead, the full $10 million goes into the trust, and let's give them an interest rate at 9% as an example, based upon their risk tolerance. It's a 10-year note. Every 10 years, they can renew for 10 years. They can pass it to their kids who can step into their shoes. But the beauty of this trust is not only you defer that extra $4 million, but you can also defer the income tax. And for places like California, when you're still living there, you have a highest income tax in New York. I'm originally from California, so I say that with tongue in cheek here. I'm now in Florida these days. Right. But the point is, the biggest challenge for the ultra high net worth is not just cap gains tax when they exit. It's actually the income tax while they're still alive. And actually the next biggest one, which is the estate tax, over 30 million if you're married, 15 if you're single. And our strategy solves, or at least mitigates, a lot of that. It eliminates the estate tax on one of our versions, and it can defer the income tax. And so what most people do, Ben, is they'll set up this promissory note, let's say at 9%, 900,000, but they'll only take partial interest payments. And they tie it to what's called their truly passive income number, which is either 10, 20, 30, 40, 50 more $1,000 per month. They exit, their ROE is 3 to 5% typically when they find us. But when they exit, now we can increase and sometimes double their cash on cash return, and or just mitigate that, because they may have fully depreciated 27 and a half years for multifamily, 39 years commercial. And so what they lost is what's called tax flow depreciation, which is exactly what we believe and most people need to be focused on. It's no longer really about cash flow for most folks. It's really about tax flow. Now, it's always both, but you really got to focus on this capital gains tax, this income tax, this estate tax, and you got to build a focused strategy that gives you the flexibility to be nimble, to be entrepreneurial. And so long story short, most of them will live off, let's say, 400,000 or 500,000 of the interest payment and let the other amount accrue and be deferred, kind of like an IRA. And the beauty is the trust itself typically operates at a paper loss because it files what's called like a C Corp tax return, which is able to accrue the interest on the return. Right. And therefore, even if it doesn't pay it, it's able to expense it, and it has a paper loss. So it's a very elegant, efficient strategy that, if properly executed, gives lots of flexibility. Now, there's the third-party trustee. Yeah, we got to work with us, right? We charge annual recurring fees, lifetime audit defense, thousands of transactions, billions of assets sold using it, all the audits, never had to change. I call it the best kept secret you either thought you heard of because you thought it was a Delaware, but it's not even the same tax code that's been done. But we have to set up prior to the close of escrow, setting everything up. A couple other quick deals we've done. We just did an $8 million deal in Massachusetts for an automotive sale, which is actually a $5.5 million business sale in Irvine just last week. We closed like $11 million out of Colorado for a business and multifamily exit. And so, yeah, that's basically what it is and how it works.
Oh, okay. And what's the name of the trust?
The strategy is an installment sale with a trust. It's known as a Deferred Sales Trust. It's using IRC 453 installment sale reporting with a third-party trustee. That's the background of it. And then we have a second version that eliminates estate tax, which most people don't have a plan for, Ben. They have this $30 million, net worth or more, and they either are trying to gift it all away, but they run out of kids, or they run out of the time to gift it. They're buying a really expensive life insurance, which is really expensive, or they're giving it all away to charity, which is nothing wrong with that, but just most people aren't 100% charitable. So we actually built a 2.0 version where upon the exit, we can eliminate the estate tax all in one sale without any gifting, life insurance, or charity required. One of the biggest deals is a $125 million deal in San Diego that was done. So this is what we've dedicated our entire journey and mission to, which is unlocking capital gains to multiply freedom and impact. We call it the reverse Tea Party on this 100 trillion. If the American entrepreneur and real estate investor doesn't get their tax flow game correct, it's going to be crushed, and the government's going to waste it, most of it, all of it away. And this is the pivotal moment over these next 5 to 15 years to be able to be in front of this, because people need to do this before they die and before they sell the assets, right? But there's 80 million baby boomers in the US alone, 10,000 turning 65 every day. And so the urgency is right now for all of these planning, all of this execution. And so that's the battle we're in. And of course, we're always looking for the top in commercial real estate, like you've been, to strategically align with, to provide these services and this education, because it's a movement that otherwise, the government is just going to gobble it up no matter what site you vote for, and they're going to spend it on the $37 trillion worth of debt. That's a disaster.
And so with that being said, so basically someone sells you a property and then carries a note and charges you an interest rate. Is that what it is? Yeah,
they actually sell it to the third party buyer, right? Okay. So we have a buyer lined up, and that's the secret sauce. Like, you're not financing the original buyer, which means your collateral is tied to the old property. All the reasons why traditional installment sales aren't that popular for most people. They're getting paid back in 3 to 5 years. So we basically eliminate all of the challenges with that by having a third party trust first buy the asset for $10 million and immediately sell it for $10 million. Same escrow. Okay, it's like an assignment of interest, right? And upon the closing, the buyer takes title the same way they would have. We're not financing them, but the trust itself receives the funds. Work with some of the top financial advisors in the country. One of them is actually in Irvine.
So the seller gets liquidated.
Yeah. No, the seller gets a promissory note, and to the extent they need or want the capital or some of it, they can pay tax on what they receive. But most of our clients will just put 100% into the trust and then just receive payments back, and the interest is on $10 million versus $6 million if they would have paid the tax. And so that's the idea. It's the compounding effect of capital gains tax deferral, and also giving the ability to have liquidity and diversification and optimal timing. You add all of these things up and you think about it. I mean, this is what we were doing 3 years ago. We knew the market in multifamily was at the height. So we said, sell your multifamily. We did a $2.5 million deal as an example for a client out of Sacramento, and their NOI was $120,000. We say, hey, we want to get you to $190, plus we want to get you out of debt and diversified. And we know the market is shifting. We're at at the peak. And so we did it. And before, they would have not sold because prices were too high, or they would have 1031 and doubled down, and then the ship would have sunk, like we're seeing with those who have done this, and the interest rates have doubled for all the reasons we talked about. And so we literally transform their ability to make great decisions, which is really what we want to empower all of the listeners to do, right? Be a purposeful, intentional entrepreneur to make great decisions. But if you're handcuffed by the 1031 exchange, guess what? It's really difficult to make great decisions with the 1031 exchange. And so we say eliminate the need for it, have a backup plan for it, and or just never do it ever again, especially if I want to be passive and go into Ben's funds that are doing double-digit returns, that have the best-in-class management, the best-in-class negotiators. I'm a mom and pop that's owned my property for 10 or 20, 30 years. I want to make sure the stewardship of the capital is with the best, but I don't really want to be in the stock market. So what do? I don't really want to be in a Delaware deal, which is a 7 to 10 year hold, no liquidity, no diversification, huge, massive fees. And so I want to mix. I want some liquidity. I might do some S&P 500. I might want to do some Bitcoin, right? And I might do a lot of it in real estate. It just kind of depends on what they want to build. But that's the point. We give them a strategy that gives them the customization to trade what's profitable for what's priceless. And we work them through this whole basically mindset shift as well, and approach. It's not easy because old dogs teach them new tricks in commercial real estate. It's not easy. And so we are those old dogs.
What do you do? What do you do if there's debt on the property?
Great question. So the extent that there's debt over adjusted basis, we do a partial Delaware statutory trust, because debt in excess of your adjusted basis is not deferrable. To the extent that your debt is equal or less than your adjusted basis, there's no problem. We just pay off the debt. And to that point, a 1031 exchange, the biggest problem I see with it for the risk component is you have to replace equal or greater debt. It's not just equal or greater value. And that puts people in a debt flow situation that can be a very detriment to their investing. And so that's how we solve it for that. Or we tell them they need to pay it down to their basis. But ultimately, we typically get debt free with us, and they don't have to worry about debt ever again.
That's great. Well, welcome to I Own It.
Okay, tell me more.
I should be interviewing you, I feel.
Yeah. Well, I appreciate that. And I appreciate you working me with through that. If people want to learn more, you go to capitalgainstaxsolutions.com, and maybe I will be on Ben's podcast here soon. Let's keep going on this, Ben. So back to the person who wants to unlock capital to their fund or their syndication, right? Are there any other creative models? And by the way, I love the bonus cost seg 100%. That's huge, right? That's also part of why multifamily was so hyper appreciated, because it had the 3 perfect storm: low interest rates, double-digit rent increases, and 100% bonus depreciation. And you got to just know that like all of these things that are just full steam green eventually kind of all just stopped. And that's part of why people are just getting washed out. So are there any other ways that you have found to unlock capital?
Yeah, absolutely. In the medical fund, as an example, let's just say you have a doctor group that owns a property. Mm-hmm. They could sell it to the fund, and we can structure it where they could take 100% of the proceeds or a partial proceeds and exchange it tax-free right into our fund. And that way they can hold on. They could be part of our fund, be diversified for their capital, not have to worry about a 1031 exchange. Mm-hmm. Come right into the fund as an investor.
It's like a 721 UPREIT. Is that what we're referring to there on that, or?
No, it's just, it's basically a structure that we can structure them to sell it to us.
Nice.
And then they can take whatever portion of the proceeds and invest in the fund. So they might.
I like that. I actually own a partial medical office building in Sacramento next to the downtown UC Merced and UC. Anyway, it's the downtown one. And Kaiser actually is a tenant in there. Medical office. It's not big, but are you saying if that group, I'm a passive investor on that one, were to sell it, they can basically be rolled up into the fund? Let's
say they sold it to us. We like the asset and we bought it. I'll actually be in Sacramento in 3 hours.
Nice.
And so they could sell it to the fund, and they can decide and say, okay, you know what, we're going to take $2 million out of the $6 million proceeds, and we're going to invest in the fund. We'll take the rest as capital.
Okay, nice. That's good. Yeah, that's creative the way you figured that one out. That's great. So you're typically only doing that for the deals that you're absorbing into the fund, or
Yes.
okay,
Yes.
got it.
Yeah.
Okay.
Yeah. The fund actually has to buy it. That's
Fund has to buy it. Okay. I like that. Has to buy it. That's good. What haven't I asked you so far, Ben, that you want to make sure that everyone gets to hear before we go to the lightning round?
Well, you haven't heard about the book and why I wrote it. You know, I've been in business for 3 decades. Didn't have to write the book. It took me about a year. It launched a few months ago. It's a bestseller on Amazon, and it's called Hard Assets and Hard Money for Hard Times. And the secret in that book is the hard asset blueprint, and everything I've learned about investing and building wealth, I put into the hard asset blueprint. So everyone out there, you could achieve your goals faster with way less ups and downs than I did. And so, with the complexity of hard assets, I teach you how to protect, create cash flow, and grow your wealth. What's great about this book and the hard asset blueprint is anyone can use it, and it's evergreen, where you'll be able to take the book off the shelf every day, every week, and be able to look at your hard asset blueprint. The other thing we did is I said, you know, Brett, we got to go a level deeper. And so what we did is we developed courses to follow the book, to bring the book to life. So I put together 4 different courses for everyone, and that's going to show you strategies, how to create consistent cash flow, cash resilience strategies. I'm going to show you how to protect against inflation, generate income, increase your net worth. I'm going to show people how to gain back control and autonomy in their life, leverage opportunities, diversification, and chaos and crisis resilience. And, you know, I mean, let me ask everyone out there, okay, this is a real simple question, is, do you remember, Brett, the first time you learned a shortcut to something and you said to yourself, wow, I wish I would have known that sooner?
Yes, I do.
That is my motivation behind what I did here in this book and this hard asset blueprint. It's why I stand here today. And the thing is, this isn't just theory, okay? The hard asset blueprint was forged in the fires of real world experience between myself and other billionaires. And I show you how hard assets can shield you from inflation, generate real income, amplify your net worth, and give you control that cash simply can't. And because we've been told the safest money to hold your money isn't the safest at all. And so I invite everyone to join me. You know, please stop hoping, stop guessing, and start building. And let me help you take control of your financial future. Let me secure your future. And so if you're ready to build an empire like I have, the hard asset and my blueprint are here to guide you. And the time to begin, Brett, is right now. There's no sense in waiting. And so it's going to take work. It's not for the faint of heart, building a hard asset empire. But if you follow my blueprint, you'll see it's a lot easier than you think.
Amazing, Ben. Everybody, Ben Reinberg. We're going to go to the lightning round. You ready, Ben?
Yeah.
All right. What does truly passive income mean to you?
Passive income means to me is where I could have someone else that I could leverage into smart money who will make me money based off my capital.
Beautiful. Question number 2, number 1 book you've recommended or gifted the most in the past year?
Oh, Hard Assets and Hard Money for Hard Times. My book, it's a bestseller. It just keeps growing.
Beautiful. Question number 3. What are you most curious about right now?
I'm most curious about cryptocurrency. It's something I really enjoy.
Number 4, what's the top way or ways that you're using like a chat GPT or different AI?
We're using AI within the company for HR, property management, maintenance, acquisitions. And so we're heavily into AI, and I've seen our whole world change using it.
Have you built AI agents yet? And if so, what's the service of choice for that?
Well, we have our own. It's AI Ben. You could ask AI Ben any question you want online if you go to benreinberg.com, and we have different courses as well. And so AI Ben can answer any business question you have. It's basically, we've cloned myself.
I love it. Question number 6, number 1 leadership quote or theme that you strive to live by?
Tough times don't last. Tough people do.
Excellent. The greatest basketball player of all time?
Well, I mean, the GOAT, Michael Jordan.
Okay, good. All right.
I'm from Chicago. I'm a
we
former
get to air this show. We get to air the show. I'm always shocked. I was actually watching
some ticket holder, Brett. I have to say Michael. He's my former neighbor in Highland Park.
Oh my gosh, yes. Come on. Okay, I knew there had to be a Chicago connection there.
You can hear my accent. I'm pure Chicago. I mean, Michael's first house, we're kitty corner. Okay, when I started raising my kids.
Yeah.
And then I bought a house on Ridge Road, and half a mile down was his house with Juanita that they just sold for $9 million. I think he put like 30 into it, and it just yeah. So I used to see Michael all the time driving around, and
absolutely love it. By the way, who is the closest? Because I went back and I'm just watching some of these old games, and I'm just like, no one even comes close to how amazing and just great it was to watch Michael compete and everything. Who is, besides Michael, it could be any sport, right? Who is the closest that you've seen? You probably saw him live multiple times, right? Is there anyone that's like, okay, he is the closest, to Michael that I've ever seen?
Well, first of all, Michael influenced my work ethic. I used to love his work ethic and seeing how he got up early to train with Scotty and even Ron Harper. And he was fearless, and he worked hard, and he was a leader. He was a true leader. And I saw someone else, being from Chicago when I was a kid, I grew up with a guy named Walter Payton. Walter Payton had a similar work ethic, a similar drive, similar championship mindset. And I would say the two of those are very comparable. I mean, again, Ernie Banks from Chicago, another Chicago guy, same type of mindset. The greats that have come out of Chicago, which is one of the largest cities, it was ranked one of the best cities in the United States now, has great champions. And they all have the same quality, great work ethics, strive for excellence, lifted up their teammates, great leaders. All of them I just mentioned were those type of people. I was blessed to grow up in a city where I had these incredible sports icons between, Stan Mikita for the Blackhawks, which hockey is huge, Dennis Savard, Tony Esposito, Mike Ditka, you name it. I mean, even Chicago White Sox, I'm a big Cubs fan, but there's White Sox that were legends too. And so just really blessed to see these type of legends play. And when Michael came about and Scotty, it was just the icing on the cake. What incredible ride they had. It was interesting when the Bulls were live, and I remember being in the office and grinding and all the travel I did. I never missed a game either in person or on TV. They had that type of magnetism. It was like Elvis was in the building. And one thing I admire about Michael that I tip my hat to, he never took a night off like a lot of NBA players do. Every night he brought it. It's why he filled every stadium around the world, is because people knew not only his greatness, but he was going to entertain and bring value to your ticket price. And he deserved everything. And you know what? It's why the kids buy Jordans. I mean, you see his excellence. You see his excellence in his product and his business. It's why he's one of the most successful athletes in the world. And it's because his habits and work ethic are second to none. And they still continue today. I mean, he's really an incredible story, really is. And that movie that came out with him about when Nike signed him, it's incredible to see. What a moment.
Thanks for sharing. I'm so glad I asked that question. I played basketball growing up, actually played in college at a small private Christian school. You can imagine a 6-foot guy who could dunk a basketball at one point. But I mean, the inspiration that he gave me as a California kid, just growing up playing basketball, you can't explain it unless you were in that era of experiencing it. And you're exactly right. Like it was, and it still is, and I try to show my kids now. It's like, let me show you, let me just come sit here and watch this with me. Right. We're going to watch this replay of this game on YouTube, and we're just going to absorb, the excellence and all of the things you're talking about.
Well, the energy that Michael brought to the stadium, you would sit in that stadium and you would feel the energy coming from that team. It was just what an incredible experience I had. Yeah.
Amazing. We're in the last question and we're way over time. Ben, after all your success, helping all the people you help, how do you best stay centered in your values, and also stay charged up to conquer even higher heights?
I never forget where I came from, and I work on myself. I'm big into personal development. I'm very emotionally intelligent. I've been doing personal development for 10 years. And I surround myself with great people that vibe at a frequency that I do. And so show me your future and I'll show you your friends. So I'm very careful who I let in my inner circle. And I don't deal with energy suckers. And so I'm very careful how I treat my mind and my body. And I'm into health and fitness. I train with a trainer 5 days a week, and I work on myself and health. I don't drink alcohol. And it's all about just taking care of yourself so I can perform at a high level for all the people that depend on me, whether it's at Alliance, outside Alliance, or around the world, that depend on my knowledge and experience.
Ben Reinberg, I want to thank you on the show. What an absolute honor it is to have spent some time with you here, and you dropped so much wisdom and insight and inspiration and leadership. I want to just thank you. I want to encourage you to keep making a huge impact for those that are building wealth and need and want and desire a group that they can trust to steward the capital in hard assets and commercial real estate. For our listeners who want to be in touch with you, what's the best place for them to find you?
I would say go to benreinberg.com. You can follow me on all the social media platforms on Instagram, TikTok, Facebook, you name it. And then you can buy the book online or at amazon.com or Barnes & Noble. It's an Amazon bestseller. If you want to watch our new TV show, our podcast, Ben Reinberg, I Own It, has become a TV show. It's going to be streaming near you. We have 13 guests that come on every season. We film it in one shot in a certain location. We have top celebrities and business minds from all over the world that come on the show now. And we do a front to camera to educate our public during the show. It's very unique. It's never been done. And if you want to learn how to invest in commercial real estate or invest with us passively, go to benreinberg.com. My company, if you want to learn more about it and invest with us, go to alliancecgc.com. Those are the best ways, and you can get into my universe. I respond to everyone. I'm very engaging with my audience. We have a large presence online and a great couple brands going on. So if you are interested in building wealth and learning about hard assets, just go to my website and we'll teach you everything.
Amazing. Thanks, Ben. I also want to thank all of our listeners for listening and watching another episode of the Build to Billions podcast. We're on this journey with you to scale from millions to billions so we get more all the way to help MVPs. We're also streaming on Capital Gains Tax Solutions podcast. If you have a massive exit coming up in Bitcoin, business, real estate, and you want to learn how to build a capital gains tax exit plan, go to capitalgainstaxsolutions.com and check out our book as well, which is called Building a Capital Gains Tax Exit Plan. Kevin Harrington from Shark Tank's in the book, which is pretty cool, and a couple other really smart people. Check out the book, Building a Capital Gains Tax Exit Plan. And we'll talk to you all again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.